Good day, ladies and gentlemen. I hope you're well. So Randy's finished a little bit early. I wasn't expected to go live just so quickly. Okay, so we are going to be talking about the Bitcoin ETF now, why it's changed the market. We're going to get into literally pretty much everything. What's an ETF? What's the Bitcoin ETF? Why do people like it? Why do people dislike it? How has it affected the market? What happened when gold and silver got their ETFs? Because Bitcoin is just like digital gold. And the main reason that I think this cycle has deviated quite a lot, quite a bit from the previous cycles was because of the ETFs. And we'll get into all of that. Before we do, let's see who's in the chat. Let me just put the chat on the screen. I do apologize. Satoshi's around. And yeah, he's probably going to get in the way, but there you go. John Legend. Let me just put on the ticker for the Princess's Army. So we've got John Legend, who's absolutely amazing. He's always supported the channel. We've got Rob C, our fellow Brit. We've got Jessie. Hello, Jessie. I hope you're well. Jessie, I did send you a DM. I'm not sure if you've got it. How's the weather? It's cold. It's actually really cold in the UK. So from now on, you're going to see me in jumpers because I literally go to work and then I come back for maybe an hour and a half, and that's literally just about it. So I'm just going to be wearing jumpers instead of turning on the heating. We've got Black Hat team. I hope you're well, Black Hat. Market Cipher has a Black Friday sale on. Okay. And there's Jesse's code if anybody wants to get into Market Cipher. Who else we've got? Oh, we've got Mark Volmer. Hello, Mark. Mike. Hello, Mike. I hope you're well. Mike, I actually changed the live streams last minute. Oh, and we've got Peace of My Mind. Good afternoon to you, Crypto Princess. Still sporting, yep, the hip hop look. I actually love hoodies. I love hoodies. I'm in them all the time. Okay, so let's get into the ETFs. It's really important because I will be at some point going into trading and I'll be talking much more about trading and more about price action. For me to do that, you guys need to understand ETFs. Now, ETF stands for Exchange Trading Fund. There's two types of ETFs. First type, an ETF is a bundle investment that you can buy or sell just like a regular stock. They are regulated. Instead of buying one company or one asset at a time, with the bulk ETFs, it gives you a little piece of different of many things as at once. So think of it like a fruit basket. Like you've got an apple, you've got an orange, you've got a banana, you've got a pear. Instead of buying those separately, you can buy the whole basket and get a little bit of everything. And that's what one type of ETF does, but with investments. So for example, there's an ETF called SPY, which includes 50 of the biggest companies in America. And by buying this ETF or one share of this ETF, you're actually investing, 500 of the biggest companies in America. You're actually investing in all 500 companies at once. That is very good because the way that it works is the idea behind it is because you're buying a bundle of investments. And this is one of the reasons why people absolutely love them. And they're popular with beginners, but also advanced investors and also big institutions. It's easy to buy and sell. And ETFs trade on the stock market just like normal stocks. So you can buy and sell them anytime you want. Anytime the stock market is open, instead of waiting for the end of the day like other investors such as mutual funds, if that makes sense. It makes ETFs very flexible, especially if you want to move money quickly, which is very important. We all want to have lots of liquid money. Otherwise, we'll just be buying real estate. So, for example, if you buy an ETF at 10 o'clock in the morning and you want to sell it at 2 o'clock the same day, you can do that, but with an ETF. But you can't do that at with mutual funds because they normally update once a day, and they have built-in diversification. Just very quickly before we go on to a little bit about the ETFs with diversification, which I actually think is half a decent product, if that makes sense. You also have ETFs that are not baskets. Not all of them are baskets. So you have multi-asset ETFs, which are a basket of assets, like the S&P 500 ETF, which holds the top, 500 stocks. You have tech ETF, which holds multiple tech companies. Bond ETFs, they hold hundreds of bonds, and you can also get a commodity ETF basket, which also holds multiple commodities. But, and this is where we come to Bitcoin as well. With ETFs, you can also have commodities like gold, silver, and Bitcoin that only hold one asset. So, for example, these ETFs only hold one asset. So, you've got the gold ETF, that's GLD, and that only holds gold. You've got the silver ETF, which is SLV, that only holds silver. You have the oil ETF, and that's just for oils, oil futures. The natural gas ETFs, they just track natural gas. Copper ETFs, which just track copper. And of course, you have the Bitcoin ETF, which just tracks, which is just literally Bitcoin. So we've talked a little bit about the liquidity of ETFs, but they also have built-in diversification, which makes them quite good. And we kind of need to understand this because when I go into trading, this is going to be very important. So one ETF may contain a lot of investments, and then you just literally spread out the risk. So one asset in an ETF, so if one asset in an ETF goes down, the others may stay stable or they might go up. So overall, the investment is less risky than buying a single stock, if that makes sense. So diversification is one of the core principles of safe investing. And I read a book, and I can't, what was it? It was, oh, what book did I read? Crypto assets, or it definitely had the title crypto assets in it. I can't remember what it was, but I read this book, and I understood diversification, how important it was. Before that, and this was like a couple of years ago, before that, I wasn't too aware of diversification, but it's so important in crypto as well. Anyway, so if you have an ETF that's um, a basket of goods, for example. So if you have one that includes 50 companies, or if one company's stock drops, your investments won't crash because the other 49 companies will either be stable or they'll be going up or they won't drop as much. ETFs as well, they do usually have lower costs than mutual funds. So that's better if you're just managing it. You can follow an index online like the S&P 500 instead of hiring managers to pick every stock, which is going to, build up. Your fees are going to go up over time. Like a mutual fund might take 1 or 2% of your investments fees per year, but an ETF might take something like 0.03 or something similar to that. And over time, this really does add up. Okay, we're going to get into more why people do like ETFs, but one second, let me just check the chat because I'm not in there at the moment. Okay, one second. All of this is going to be very important because I am thinking next year of doing more trading on the channel. Oh, we've got David P. Hello, David P. I hope you're well. And we've got Maninja. Hello, Maninja. I hope you're well. And then we've got Julie. Hello, Julie. Good morning to you as well. Jesse, I don't know if you can put Julie's link in. Julie is another crypto YouTuber and she is absolutely lovely. I love Julie. Or if they go all down. It's unlikely though, and obviously unless something massive happens. I am going to be coming to that because that's an issue that some people in our community have, and I'll tell you exactly why they have that issue. In fact, I've covered that issue before when I was going through the history of Bitcoin as well. We've got Steve. Hello, Steve. My brother-in-law's name's Stephen. You remind me of him. I don't know, every time I see you. I was just like, oh. Okay, also, there you go. Julie's channel is on in the chat. Thank you, Jessies. Do go and subscribe to Julie. Okay, so we're going to be talking about why people like ETFs. So ETFs, apart from them being more liquid, you have a lot of accessibility with ETFs. You can make investments. Okay, don't worry, that's the cat. He hasn't died. He's just killed something else. And this happens all the time as well. So with accessibility, ETFs make it very easy for beginners, especially beginners, older people as well, to get into stocks and things like that because they are regulated. You don't need to have specialist knowledge. And you're going to kill yourself, Satoshi. Oh my God. Okay, let's forget it. They have 9 lives. Cats have 9 lives. Okay, so you can invest in stocks, bonds, gold, silver, or Bitcoin without having to buy the physical asset. And we'll get into the history of the history of gold and silver, what it was like before the ETF, what it was like after the ETF. And some ETFs let you invest in entire sectors, companies, commodities, all the rest of it in just one purchase. So as you can see, they are really, really good. And if I'm completely honest, they have been given a bad name in crypto, and I don't think that's completely warranted because they have also cleaned up the space, and we will get into all of that as well. So if you wanted to say, for example, have exposure to gold, but you didn't want to buy gold bars or gold coins, you can just buy the gold ETF and it tracks the price of gold. It's transparent as well. So ETFs report their holdings every day. So you always know what you own. It makes them more transparent than mutual funds, which are only reported once a quarter or thereabout. And you can see exactly what companies or assets are in the ETF that you're in or you've bought every day. So you're never in the dark. And I think that's really important as well, because for someone like me, I can't invest in things like the alcohol industry, the pornographic industry, all the rest of it. So if you have religious beliefs and all the rest of it, it's really quite good in that sense. So ETFs are really, really popular and they are a game changer in investments. I think the first ETF, now I may be wrong in this, came out maybe in I think it was, when was it, in the 1990s. They're not hugely old, if that makes sense. I mean, so I think most of us were some of us were born in the 1990s. Probably shouldn't have said that, but there you go. So ETFs are also easier to trade. If you wanted to trade them, I personally wouldn't trade an ETF, but there you go. But you know, we'll see what happens with the channel. So you can buy and sell them anytime the market is open. So this usually means you have full control over your investments, and you don't have to wait until the end of the day to exit an ETF. Diversification, like I said before, that's built in. ETFs contain many assets. The basket ETFs do. And then obviously you've got the single ETFs as well. So you could have a basket of stocks, bonds, shares, commodities. It spreads out the risk. It is so funny because Satoshi behaves quite a bit. He doesn't listen, but he does behave when I'm not on a live stream. As soon as I get onto a live stream, he misbehaves. He kind of knows I can't tell him off. He kind of knows I can't tell him off. So he's really misbehaving now. Okay, so it's like you spread the risk. So if one investment does well, the others so if one investment does not do well, the others balance it out. It does make your money safer than if you bought one commodity or one stock, if that makes sense. The fees are lower. This is again one of the reasons why people like ETFs. They they do track an index, all the rest of it. You are charged lower fees than traditional mutual funds. And I personally don't like mutual funds. I think they're very old. I think they're expensive. I don't think they're as liquid as they can be, especially in nowadays. In fact, if I'm completely open, I think the markets should be open for a lot longer as well. That's why I love Bitcoin and I love crypto. Um, over time, the amount of money that you can save with fees on an ETF, it really does add up. And obviously, you've got the accessibility as well. You don't need a lot of money to buy an ETF. You don't need to be an expert. You can DCA into ETFs, and you're investing in. You can invest in entire sectors, countries, commodities, all the rest of it with that one purchase. You can also get exposure to gold, silver, Bitcoin without having to buy the physical asset. And we'll get back into that soon. Again, they're transparent and also they are tax efficient. So they're structured in a way that that you're able to understand how to pay your tax a little bit more, if that makes sense. So all of these benefits explain why ETFs have exploded in popularity over the last few decades. And they've made investing simpler, safer, more flexible. And you can be a complete beginner, or you can be a seasonal investor, and ETFs do they are interesting if you're into that sort of thing, which I think a lot of people are actually. And here's the exciting part: ETFs literally changed stocks and commodities like gold and silver and even Bitcoin now, and we're going to be going into all of that. Okay, so ETFs are like a bridge. They bring complex matters, sometimes really difficult things to understand. It's very difficult to pick individual stocks, all the rest of it. You don't want to go and pay for a manager, all of it, all the rest of it, unless you have a huge amount of money. Most of us don't have that type of money. It gives you access to a market straight at your fingertips. It allows you to grow and build your wealth without needing professional advice. And everything that I say today is not professional. It is not financial advice and all the rest of it. And I think nowadays a lot more people are taking a lot more responsibility for their own financial assets. So let's talk about the history of the Bitcoin ETF, because this is huge. It really, really is. Now, ever since I got into Bitcoin, I was always hearing about the ETF. So now that we understand what an ETF is, how it works, we can look at the history behind it. This is going to help us understand why its approval last year was such a big deal. So Bitcoin is So Bitcoin is difficult for beginners and institutions really to invest in directly, but mainly for beginners. You need a crypto wallet, you need crypto keys. You're at risk of getting hacked. You're at risk of losing your coins. There's regulation risks. The regulations are always changing. And in many countries, it can be really tricky for institutions and individuals to hold Bitcoin directly. Now, a Bitcoin ETF solves these issues. But before I go into that, I need to change my screen and just have a little look at the chat. Oh, hello, Cheese. I hope you're well. Oh, Wick. Hi, Wick. I hope you're well. Mm, I don't know what's been going on with YouTube. I am in a couple of groups, influencer group. Oh, you're in the 90s. Yeah. Yeah, a lot. Oh, okay. Yeah. You're a little baby. Oh my gosh. Um, oh, Maninja. I had no idea you're in the 70s. Which is lovely. Oh, we've got Soul of Jaffa here as well. Rob C from the 80s. The 80s, I like the 80s music. I love the 80s fashion. All that leather, and all the rest of it. Okay, Infinite Game. TA, I hope you're well. It's good to see you. Ah, Mike's an 80s baby. Yeah, that was a nice decade. You must admit that was a nice decade. It had the best fashion and the big hair. Who was it? Was it Bon Jovi? I think Bon Jovi was from the 80s. And oh, that George. What's his name? Oh my God, he was British as well. Who's that George? George Michael. Do you remember George Michael? He, yeah, he was really, really. I'm going to say he was really, really cute. I liked his really big hair. Good day, Alexandra G. I hope you're well. Oh, the Bee Gees. Yes, I know the Bee Gees. Unfortunately, I think they've all passed away, or I think one of the brothers is left. What was it called? Survival or something? I can't remember. Um, they had a massive song. I don't know what it was though. Uh, who's yeah. Yeah. Good morning, Army Piper. I hope you're well. Is Army Piper an 80s baby? I bet Army Piper's an 80s baby. Um, JR, I hope you're well. Oh yeah, Staying Alive. Oh my God, I love that song, Staying Alive. But yeah, unfortunately, I think two of the brothers, if not all three, oh, they I don't yeah, I'm not sure. I think some of the brothers have passed away. I'm pretty sure two of them passed away, which is really, really sad. And Michael Jackson. Yeah, Michael Jackson. Where was he from? Was he from the 70s? No, he was the 80s, wasn't he? He was amazing. I absolutely love Michael Jackson. Oh, you're a 70s baby. Yeah, they were really good years, the 80s. Um, another 80s baby, Red Dawn. I don't know what that is. Oh, Tragedy. Yeah, that's it. It was Tragedy. Um, yeah. Yeah, so we're just looking at 90s, 80s and 70 babies. I think we've got quite a few. Oh yeah, the Jackson 5. Yeah. I must admit I did love Michael Jackson. It's actually it's just one of those things when somebody passes away, you kind of realize how good they were and you don't realize how amazing they were until unfortunately they do pass away. Okay, awesome. Satoshi, can we just go here? Okay, hello David. I hope you're well. The BG stuff, yep. I hope you're well. And Curtis Hill. I hope your kitty's well, Curtis. We've got one, Satoshi now. Um Jesse, what were you? Were you in 80? I think you were a 90s baby. Oh my god. Yeah. Okay, anyway, let's get back to crypto. So let's talk about the history of BTC, the Bitcoin's ETF. So why did people want Bitcoin to have an ETF and how back does this go? I think it goes back to like 2013. So Bitcoin is very hard for beginners, as we all know, because we were all beginners. It took I must admit, it did take me quite a long time to actually figure out what Bitcoin was, and then figure out how to open a wallet, how to buy Bitcoin, how, your public key, your private key, you don't actually get to see them, and all the rest of it. And then you're at risks of hacks, of losing your coins, which I've done. Um, Obviously, we've got the regulations in different countries. They're always changing. A Bitcoin ETF solves these issues, and that's why people have been wanting a Bitcoin ETF for so long, and why it was such big news. With a Bitcoin ETF, obviously you can invest through a regular brokerage account, and I have had Jaw from the Daily Bitcoin Journey, 88 Sats radio on here, and he does say that if there was an older person, say for an older person, a grandparent or something, he would actually say to them, you might as well just buy an ETF, because that's what they feel safe with, if that makes sense. And obviously they're not going to lose their keys, somebody else is going to hold their crypto for them. It is not ideal for, I personally don't think it's ideal for the younger generation. You guys can learn, I'm not even being funny. Like, you ain't got an excuse. You know what technology is. At least you know how to turn on a computer, if that makes sense. So ETFs companies handle things like the custodian, the storage, and the security of the Bitcoin ETF. That's why people wanted it. And with a Bitcoin ETF, there would have been a lot more exposure. So we're talking about the early 2000s here. Exposure without people having to touch the crypto themselves. And essentially, back in the day, people wanted an ETF because it will bring Bitcoin into the mainstream. It will make it more accessible to retails and institutional investors. Now, the first attempts to get an ETF, the idea of an ETF was, it appeared in 2013. What was 2013? 2013 was Bitcoin's first bull run. We went into detail about this a couple of live streams ago. What happened in 2013? We had two peaks. Remember, in the first part of 2013, we had the banking crisis. It was 2013. We were fresh out of the 2008 financial crisis. We had the banking crisis in Cyprus, all the rest of it. Europe got really nervous, if that would make sense, and that drove up the price of Bitcoin. It was decentralized as well. Remember, that was very important. The banks and all the rest of it, the governments, everything, it was all centralized. People were looking for something decentralized. People started to put money into Bitcoin. It ran up the first peak. And then what happened? We all should know this because I have spoken about this, but I'll just remind you again. Mt. Gox had an issue with transactions. It only lasted a couple of hours. It only lasted a day. But that was enough to scare everyone. And people were like, okay, this experiment is over. We're not going to invest in Bitcoin. That was round about the time of the first ETF appeared, if that makes sense. Investors and companies were realizing that Bitcoin was becoming popular, and it was hard to invest in Bitcoin safely. And then obviously we did have the second peak in November 2013. And you all should know again what led to that second peak. We had the Chinese investors coming in. Remember, we had a lot of media coverage, all the rest of it. And then obviously that went up to the second peak. And then obviously we had the China FUD. And we will talk about how China has manipulated the market several times. And hopefully soon, when the price of Bitcoin, or when the market cap of Bitcoin is somewhere near the market cap of gold, China and other individual countries and players will not be able to manipulate the price of Bitcoin as much, or hardly ever. So do you remember the Winklevoss twins? Yeah, the same ones from the Facebook story. They submitted one of the first ETF proposals, and it was called the Winklevoss Bitcoin Trust. And I actually haven't got the 2017 chart up, but if you look on the 2017 chart on the weekly time frame, if you look at the 2017 chart on the weekly time frame for Bitcoin towards the beginning of the year, and I don't remember what month it is, there'll be 3 weeks where it just literally just goes down. That was when they were refused their ETF in 2017. So it's actually on the chart. It was a massive thing at the time. Other companies followed with proposals to have a Bitcoin ETF, and it was all in hopes to create it, to make it easier and a safe way for investors to invest in Bitcoin, everyday people and also institutions. Why institutions? Because obviously institutions can, they have the know-how. They know how to buy, sell, hold Bitcoin, store it. They have the money. But the thing with institution was it was regulatory compliance, if that makes sense. It was regulations. With an ETF, they had more of an idea of the regulations, blah, 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 blah. This is where the SEC comes in to our story. So remember Gary Gensler? Yeah, we can't forget him. Kind of feel sorry for the people who have entered into crypto so late. Like, we lived through so much. Like, our skin is so thick. So from the SEC, which stands for the US Security and Exchange Commission, SEC, and that was irresponsible or is responsible for approving ETFs. From 2013 onwards, the SEC rejected many ETF proposals, and this trend literally continued until last year or the year before when the futures was approved. But literally, the SEC wasn't as bad as we thought, because when I started to do the research into the ETFs and why they were getting improved, I learned a couple of things. So the SEC were very, very anti-crypto, but you have to see back then things were different. They're not the way that they are now. And even now, things are not brilliant. The SEC wanted to protect investors and ensure that any ETF met regulatory standards. So why were the ETFs rejected? They were rejected because of market manipulation concerns. And I will do an entire live stream on market manipulation because I've seen it so much. When you actually get into Bitcoin and crypto and all the rest of it, you don't actually know what's happening until time passes. And then you realize what's been going on in the charts. And then obviously you look back at the history and you're like, well, why is this red candle here? Why did we move down, $10,000 in a day, all the rest of it? And then you get to know what was happening behind it. And a lot of times there was a huge amount of market manipulation. So Bitcoin's price can be influenced by small groups, and especially back in the day, 2013, 14, 15, even 16, 17, 2017, it was really when the institutions started to come in. But before that, groups of people, whales could manipulate the market, exchanges could manipulate the market, and even they probably did earlier this year with the Bybit thing. But we won't get into that right now. There wasn't a lot of regulation at the time. Institutions especially were worried that about regulation and how much they can hold and how it's going to be taxed and all the rest of it. Regulators were worried that somebody could artificially inflate or deflate the price. Bearing in mind they're doing this in fiat, that doesn't seem to bother them. But in crypto, it seemed to have it seemed to bother them a lot. This could harm investors who bought ETF shares. So this is one of the reasons why it got rejected. This is a lot of the concerns that we have as Bitcoiners have with the fiat market, if that makes sense. Another reason why it got rejected was because of the volatility, which is pretty much obvious, actually. It's pretty much obvious. Then we had Bitcoin's price has historically gone up and down, sometimes dramatically, sometimes by 20 or 30% in a day. Yeah, not ideal. Regulators feared that retail investors, especially beginners, could lose a lot of money quickly because of fear, greed, panic, FUD, all the rest of it. And we do see that even in crypto today. There wasn't proper oversight. There was a lack of proper oversight in the market. Many Bitcoin exchanges were not regulated. The SEC worried that prices weren't always going to be reliable, but that's why one of the reasons why we love cryptocurrency, why people are making a lot more money in cryptocurrency. Um, but obviously, they had their own mindset and they were protecting a certain branch of clients, if that makes sense. Where, as some of us are younger and we don't mind taking risks, if that makes sense. There were other reasons why they were rejected. So the ETFs were not improved because the companies, institutions who were planning on running these ETFs, they didn't have proper custodian security in place. There was concerns about security, all the rest of it. Another reason why the SEC was concerned and it rejected the ETFs was because holding Bitcoin is not really that simple. You have to hold it securely. Exchanges and wallets have been hacked in the past, and the SEC wanted to make sure that, and I think I might be giving too much credit to the SEC. We did live through it. A lot of the things that we're seeing now are, things that happen in the fiat system, all the rest of it. And a lot of people did feel penalized in the crypto space, especially Bitcoiners. Storing the ETFs, they had to be stored safely before the SEC could approve it, and they had concerns about that. They had concerns about investor protection. The ETFs, they wanted it to be for the broader public, not just people who were tax savvy or institutional investors, if that makes sense. And regulators were concerned that unsophisticated people who were beginners, people who didn't really know what they were investing in. And bear in mind, we saw this in 2013, 2017, and also 2021. In all of the bull runs, people didn't really understand what they were investing in. Nowadays, I must even say, I know when I say a lot on this channel, the different types of traders that they are and what an investor is. And still, a lot of people really don't know what investing is, if that makes sense. Let me just quickly check the chat because I need to go to another screen. Gosh, you guys talk a lot. Thank you, Julie. Yeah, guys, please can you hit the likes? There's 32 people watching now. I don't know how many likes I have, but I never say, or I don't say enough. I should have it on this banner now. I should have it on this banner because I always forget. Yeah, the market is killing people again, but this, when I get into trading, I will have words about that. But right now, I'm not going to say anything. Exactly. Can you imagine how much governments can now manipulate the market? Right, okay. You guys are so funny. Oh my god. Oh, you're a 60s baby. Yeah, you know what? It happened in the 90s. Wasn't there this thing where, or was that the 2020s? Because I remember as a teen, they were saying something like, oh, pop's dead. And everybody started to listen to rock music. And was it Limpin Park or something similar? I can't remember now. Thank you, Alexandra G. Okay, awesome. Right, so let's get into. Okay. Um, so there were so many reasons why the ETFs were rejected. Um, Also, we also need to talk about the cycle. So in 2013, 2021, there were dozens of ETF proposals and they were rejected. Can you notice what was 2013 and what was 2021? They were bull cycles. So these ETFs were literally being filed for the bull cycle, and each rejection that they had, to the credit of the SEC, it often did cite some concerns: manipulation, volatility, um, storage, investor protection, all the rest of it. Despite all of these rejections, investors continue to push for ETFs. And that's what I love about the crypto space, especially with Bitcoiners as well. They wanted something safe and regulated across Bitcoins. Lessons were learnt. So, although it was a very painful time for the people in crypto, especially when the ETFs were being rejected, all the rest of it. And I remember last year when the ETFs were finally approved in January last year, I was like, you know what? Why even bother? Like, we just know they're not going to get improved. They're not going to get improved, blah, 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 blah. And then they were approved, and I was really, really shocked. But when, so over time, these rejections, they forced providers, these institutions, these exchanges, to develop better security, to develop better information. They helped with regulation and the strategy and all the rest of it. Exchanges and all the rest of it did improve compliance and transparency, and the market naturally matured since 2013. By 2021, these improvements, so 2021, I think it was. It was 2021, I believe it was 2021. We got the Bitcoin's futures ETF, and that was improved and that approved, and that was followed later by the Bitcoin spot ETF and then the Ethereum spot ETF, which was brilliant. So, in the early history of Bitcoin ETF, it was really a story of persistence, of trial, of error, and gradual um, evolution. And we saw that as well between all of the cycles. So, I remember when we went back and we spoke about all of the cycles and the bull runs and all the rest of it. When we had a bear market, things got better. The people who stayed in crypto improved the crypto ecosystem, the crypto space for everyone. So, from the very beginning, investors were excited about Bitcoin. There were major problems buying and safely storing and holding Bitcoin was complicated. It was risky. Early developers and adopters had to deal with private keys, wallets, exchanges, and the risk of hackers and lost access. People wanted things to be simpler. They wanted things to be regulated. They wanted a regulated way to invest. They wanted something that would let them participate in Bitcoin's growth without having to manage all the technical details themselves. Now we can do it because we're in crypto 24/7. If you have a job, a full-time job, maybe you have two jobs, or you have kids, or you have a family member that you're looking after, all the rest of it, people don't have time to do this. So, um, I'm so glad we actually now got the ETFs on that scale. On that scale, although I absolutely hate the next bit that I'm going to be talking about, and that's the centralization of it. Now, the SEC was very, very hard on the space, and it had so many concerns. Some of them were unfounded, if I'm completely honest. Some of them were just ridiculous. There was more issues with the traditional fiat system than there was with some of the Bitcoin crypto system that we had. And I think a lot of people did feel penalized. Bitcoin is very highly volatile by nature. And this caused massive swings in the price in a single day. However, a lot of us are in Bitcoin and crypto for that reason, if that makes sense. So the market It's still young. It's still young now. It's fragmented. There is still little oversight, all the rest of it. And there is potential for manipulation then and now. There's potential for fraud then and now, and inaccurate pricing. But we have the same issue in other markets as well, and in the fiat system as well. So I can really feel like how penalized the Bitcoin community felt, if I'm completely honest. We just didn't feel like they understood us at the time. But it's all done and dusted, and it's all kind of forgotten now, if I'm completely honest. It was a big thing when you were looking through it, living through it. So despite all those repeated rejections, the demand for a Bitcoin ETF never went away. Investors and companies learnt from every rejection. They improved security, protocol, all the rest of it that I've been talking about. Exchanges became more transparent, and the market obviously matured. Surely, safely, slowly, these conditions allow the regulators to look and relook at the Bitcoin ETF. And eventually, all those improvements, and there was lots of them, paved the way for the first Bitcoin ETF, futures in 2021, and then obviously the spot later. And the approval of the ETFs was a huge, huge turning point. And I'm going to be talking about what this could mean in the future for Bitcoin, and we'll be comparing it to gold as well, because a lot of things happened after the gold ETF was improved. Bitcoin is no longer a small niche asset only for the tax savvy, only for individuals like us. It's not like that. It's now for everyone. The ETFs have opened the door for mainstream investors, including institutions, to participate somewhat more safely, definitely more conveniently, if that makes sense. Although you have to pay a fee for whoever's going to be buying and holding your Bitcoin ETF, but it's good for older people, if that makes sense, or people who need that extra bit of help. So in essence, history has shown us it was a long journey. It really, really was. But people kept pushing for access. Regulators kept saying no. We kept pushing. The market involved. Both ends met at some point. And today, the Bitcoin ETFs represent that bridge of decentralized crypto and regulation traditional financial system, and it's easier than ever for people to now invest in Bitcoin. Now let's talk about, I think, who was it? It was Peace of My Mind was saying, who owns the ETF? This is where a lot of Bitcoiners are still not happy, but it is what it is. The ETFs are for a different market. They're for a different type of people, and we want to include that type of people as well. So when you do buy a Bitcoin ETF, you don't actually directly own it. So instead, you own shares of the ETF, which represent the proportion or your claim of the ETF. Of Bitcoin that's been held by the ETF. So the ETF company, who are the ETF companies? They're like BlackRock, Vanguard, all the rest of it. They actually hold the Bitcoin securely. They hold it for you. They buy it for you. There's a managing fee, which is annoying. But the key point is here that the people don't directly invest in Bitcoin, if that makes sense. Your ETF shares will rise and fall with the price of Bitcoin, but you don't have the ability to transfer or spend your Bitcoin directly. The role of the ETF provider is to buy, hold, secure your Bitcoin on behalf of you, basically. They are responsible for the safe storage, often in cold wallets and in vaults. This is high business, if that makes sense. There's a lot of money involved. They have to ensure that the ETF tracks the Bitcoin price accurately, that they're not buying paper Bitcoin, that they're not buying fake Bitcoin, if that makes sense. They do need to report their holdings, and they need to manage the fund professionally for things like tax and all the rest of it. So things like people like BlackRock or BlackRock's Bitcoin ETF buys the actual Bitcoin, it stores it safely for you on your behalf, so you don't have to worry about losing your keys, which for some people is very, very important. It matters to some investors. There's no need to manage your private keys, your wallets. Um, it's all professional. Large ETF providers have insured storage, and it is industry standard security. Easy. You also do have easy access through the brokerage accounts. You can invest in Bitcoin through your usual stockbroker or app. You don't have to deal with the crypto exchange itself. It's the actual reason, if I'm completely honest, that people in Bitcoin or the legacy people, a lot of people who were there before, do not like Bitcoin. Um, I see that that there is a market for it, and it is needed. If I'm completely honest, but it's not your keys, not your coins. Who said that? Was that Jesse who said that? I can't remember now. So in the Bitcoin world, there's a rule: not your keys. If you don't hold your private keys, you don't really own your Bitcoin. The private keys are like these secret codes. You don't get to see them, by the way, because I used to be like, where's my private keys? Where's my public key? All the rest of it. You don't actually get to see them. They are like ridiculously long, and they're encrypted and coded and all the rest of it. But it proves your ownership, if that makes sense. And it proves that they are your Bitcoin, that you hold them. Your seed phrase you can even have, which is normally 12 or 24 words. If you memorize that, you can literally walk across the border with, I don't know, $1 billion in your head. That's about it. If you were to take, like, say, £1 million of gold across the border, you're going to get stopped, you're going to get searched, you're going to get seized. Your gold's going to get seized. There's going to be an inquiry, all the rest of it. This is why Bitcoin is digital gold. It's so much easier to transport and all the rest of it. So yeah, so you store your Bitcoin. Most people actually store their Bitcoins on exchanges or in an ETF. You don't have to have your private keys. And technically, for a lot of people, including myself, it means the Bitcoin is not fully yours. And that's in the eyes of the hardcore crypto community. Um, Other people don't like the ETF because ETF providers, they decentralized. If I'm completely honest, you have to trust a centralized company like BlackRock or whoever to hold your crypto safely. There's a massive things between centralized and decentralization, banks, all the rest of it, governments. We do have a major issue with them. Now, if you read things like the Bitcoin Standard and other books like that, until you read things like that, you don't really understand why people have an issue with it, if that makes sense. Some Bitcoiners, myself maybe included, um, see this as it going against the original philosophy of Bitcoin, going against the spirit of Bitcoin, because your ETF shares depend entirely on your ETF provider's will, if that makes sense. If something goes wrong, like a hack, mismanagement, bankruptcy, at the ETF company, your investments could be at risk, probably are at risk. On contrast, if you hold your own Bitcoin with your private keys, basically your seed phrase, in your head, that's all you need really. You eliminate that risk entirely, although it is your responsibility to make sure your Bitcoin is safe. Bitcoin ETFs are great, they're convenient, but for people who are here for the technology, the cypherpunks, all the rest of it, they're not ideal. But not everybody is young and tax savvy, so I can see that they are pretty much needed. So even though the ETFs have drawbacks, many investors still love them. They do solve practical problems, all the rest of it. They do actually reduce the risk of hacks because there's much more security. They do reduce the risk of loss. So we've just got to balance things out because, as you know, or as you can see, I'm literally 50-50. That part of me just doesn't like it, and part of me thinks, oh my God, you know what? Actually, that is a good product, if that makes sense. And I think over the years, I've just been conditioned not to trust the financial system, not to trust decentralization. And I can go on and on about why I don't do that, why fiat is going to go to zero and all the rest of it. But ETF providers have to be professional. They have to, protect your Bitcoin, protect the investors, all the rest of it. ETFs are popular. They are easy access for regular investors. ETFs can be bought and sold with normal stock brokerage accounts. You don't need to navigate cryptocurrency exchanges, wallets, blockchain technology. Um, institutional investors do love them. Big investors often can't hold Bitcoin due to regulation, compliant risks, rules, and all the rest of it. So ETFs allow institutions to invest in Bitcoin legally, safely, which brings more legitimacy into the market. And that's something that I forgot to touch upon. The amount of legitimacy added to the crypto space because of the ETFs has given it a huge, huge boost. I really do want to go to talk about is there a limit on how much you can withdraw from an ETF? Um, I I honestly don't know because I don't own any Bitcoin ETF. Um, but I could probably tell you there probably is in the UK because we have such an anti um, money laundering system, if that makes sense. They don't actually in the UK, the government does not expect you to have any money or any savings. And if you do, they want to know where you got it from, how you got it, and all the rest of it because they just tax you and the cost of living is so high and all the rest of it. And yes, it is. It's like paying a bank fee and all the rest of it. Mainly, I think with the ETFs, it's when you buy and sell. That's where you pay. That's when you pay pay the fee. But obviously, it's all very difficult, different. It's all very different. Um, it is very interesting. I spent a long time studying all of this. I actually spent a long time studying why the ETFs were rejected. And I can see it from both sides now. Now that we're initially out of that, we're out of that phase where, oh my God, is that the time? Oh, we're nearly coming up to a minute. What I'll do next time, an hour. What I'm going to do next time, I'm going to go through. Um, I'm going to end it here. So what we've discussed in this stream is what are ETFs, the history of Bitcoin ETF, the reasons why it was rejected, how it got improved. It was all about the market maturing. It was all about the market um, evolving. So institutional and investment. Um, Institutional and retail and the SEC saw that we were cleaning up our act, we were holding them safely, that the technology was improving for holding the transparency, all the rest of it. Um, all of this was involving, and then finally we did get our ETFs. Now, after we got the ETFs, I'm going to do this very quickly. Let me just run through it because I don't actually want to spend another um, live stream on this, if I'm completely honest. Okay, so before the Bitcoin ETF existed, gold and silver were the assets that literally everyone was looking for a safe haven. And we're going to go into gold and silver. I'll do it in 5 or 10 minutes. I'm going to be quite quick on this now. I was going to go into a lot of detail with what happened with gold and silver. As we all know, they've been around for thousands of years, but investing in them wasn't always easy before the ETFs, for the gold and silver ETFs. And we'll see as we continue what happened to the price action, especially with gold. And it's So funny, because when I was actually doing this research and I was looking at the chart of silver, it kind of just reminded me of Ethereum. So like, yeah, we'll get into that. But with the introduction of the ETFs, both gold and silver became much more accessible. They became liquid, they became easier to trade, and their price cycles were literally transformed. And when you go back and do this, because oh my God, it is like literally so interesting. When you look at the cycle for gold and you look at the cycle for um silver before they got their ETF, you're like, my goodness, a 19-year bear market for gold? Like 19 years, it just literally kind of just had a bear market for 19 years. It's you know, and then the ETFs stabilized it. So the gold ETF, what was that? Before we had the gold ETF, if you wanted to invest in gold, you had to basically hold the gold in some extent. So either it was in a vault, either somebody held it for you, or I know what they do in Pakistan, India area. So my ethnicity is Pakistani. They make jewelry out of their gold. So they just literally wear gold jewelry. You will see an auntie walking down the street with like £20,000 worth of gold on her, and they will wear it every single day. I find it hilarious. I really do. When we're at a wedding and there's literally someone sitting there and they've got like £20,000 worth of gold on them. It's so funny. Oh my gosh. So with the gold ETF, what that did was it allowed it it allowed investors and sorry retail investors and institutions to buy the gold ETF and get someone else, the ETF provider, to hold the gold for them. So when you're buying the gold or silver ETF, what you're doing is you're not actually owning the silver, the actual gold or silver itself. It's not in your hand, if that makes sense. You don't, but you have a claim on the proportion of the gold in that fund. So in 2024, when the gold shares or the gold ETF SPDR was launched in 2024, that's when it's got its ETF. Gold was stored in vaults while investors bought what was representing the gold, which was the ETF. You had easy access. You could you could have a brokerage account. There was no need to store the gold safely. Um, Bearing in mind, if you had £1 million of gold, how would you store it? Because I had this question a couple of times. Oh, I don't need anyone to, store my gold. It can be underneath my pillow. I'm like, no, it can't be. If you had £1 million of gold, would you keep it underneath your pillow? No, you won't be. Like, we're not talking about people with like £5,000 worth of gold or 10,000 or £20,000 worth of gold. If you really want it, like, we're talking about people who have, and there are a lot of individuals who have a huge amount of money in gold and silver and all the rest of it. You can't have that underneath your pillow. It's just way too much gold. You need to have security for it. If you want to transport £1 million worth of gold, say you have £1 million worth of gold, or even £50,000 worth of gold, right? That's your life savings. That's your heirloom. You want to take it, I don't know, you're migrating somewhere, and all the rest of it. You rock up to the airport, what they're going to do, they're going to confiscate your gold. Somebody's going to steal it from you. Somebody's probably going to murder you for it. You need to have security around that gold. It takes time, it takes effort. Holding the physical thing, gold and silver, is not easy. It really isn't. I think people don't really understand that because they're always thinking about small amounts of gold. But if you've got like 50,000, 100,000, half a million, you're going to need to have security for that. You're going to need to have logistics. You're going to need to have transportation, all the rest of it. And when you're looking at institutions and all the rest of it, when they have millions or billions of pounds of gold, the amount of money it takes just to keep it secure and all the rest of it, it's a huge amount. So when the ETF came out, it was a game changer. And also, the ETF was highly liquid, which is something that gold is not. If you want to sell gold, you need to take it like to a gold market or something similar. Um, if somebody wants to know if you've actually given them gold, they need to melt that gold down. It's not easy. So this made it, the gold ETF and the silver ETF made it so easy. So after the launch of the ETF 2024 onwards, gold literally just went up until 2011. No, 2004. Sorry, 2004 the ETF was approved for gold, and it literally went up to it literally had a bull cycle of how many years is that? Is that 7 or 8 years? Massive bull cycle, 7, 8 years where it literally just went up to 2011. In between that, we had the financial crisis of 2008. What happened with gold? People started to invest in gold because it was seen as a safe haven, if that makes sense. And it spiked hugely. With silver, that was launched in 2006. And what I'm trying to do is, I do have some charts. I'm going to quickly show them to you. So that's the silver one. That's the gold. Okay, let me show you this one very quickly. And this is the reason why sorry. The reason why I'm showing you this is because we need to know what's going to happen with Bitcoin. So here we go. Oh, you can't see the bottom of it. Okay, so here we got the price of gold. All the rest of it is prodding along nicely. All the rest of it, and then, yep, in 2004, you get the ETF, and it literally goes up. It goes parabolic. It did drop a little bit here, which I don't know. I think that was 2009. I don't, or maybe it was 2008 or something similar. But it doesn't matter. That's nothing if you see how far up it goes, right up to 2011. Now, what happens if the same sort of thing happens to Bitcoin? Because Bitcoin is a far greater asset than gold. It really is. And this one here is the silver ETF. So 2006 here. I don't know if you can see my cursor, but this is where the ETF was approved for silver. Now, it went up. It didn't go as it wasn't as steep as gold. And in 2008, between 2008 and 9, it did have a retracement when we had the financial crash. But after that correction, it literally went up. And again, it went up to around about 2011. So that was the sort of bull run for silver after its ETF was approved. I'm going to end it there. I was going to go into detail about what happened in all the little years and all the rest of it. You get the gist of it. You get the gist of it. Because the ETFs are so massive, so massive. And when we had the ETFs approved in crypto, Bitcoin made an all-time high before the halving. That's never happened before. And I do think that that is the reason why we have deviated quite a bit this cycle, if that makes sense. So yeah, we will see what happens afterwards. We will see. I'm going to end it here because it's been over an hour. It's been 1 hour, 8 minutes. Thank you so much, guys, for coming along. I'm just trying to read your comments as I'm talking. I don't know. You Mount Knox. Oh my god. Oh my god, look, Mr. Alex Storyteller. Hello, how are you? Past performance is no guarantee of future returns. That is very true. Oh, I'm glad you liked it. I really am. Okay, so that's brilliant, guys. Thank you so much for coming. Next week, I'm starting my TA on the channel. So I've got Bill Noble, I've got Formation coming on, and we're going to be looking more to do with the price action rather than so much education on the channel. As we put along, I'm going to be teaching you a lot more about the the indicators. So when I do start to talk more technical analysis, you guys should know about the indicators. Now, when I talk about the ETFs, the people who are here should know what the ETFs are, when they were improved, why they were improved, why were they rejected, what happened to the gold ETF that what happened after the gold ETF was approved, all the rest of it. So I don't have to go into any details now. I could just be like, okay, the ETFs. Anyway, guys, thank you so much for coming along, and hopefully I'll see you on Tuesday.